I mean, it first starts with the ideas we generate, which is via the options market and tracking activity every day. Big institutions that have access to better information and tools, that's where they make their bets, so you want to ride along with the people that have that kind of knowledge. It's a signal for me to, I should be paying attention to this company, and from there I can go into researching the company further, trying to figure out why they might be positioning for this. Is it an event? Is it just a really good company that good things are happening? And from there, it's breaking that down and using a multi-pronged approach, which ranges from the fundamental analysis of companies. And when I say fundamental, it's not just looking at a ratio and metrics, it's paying attention to the trend in fundamentals, which is more important than the numbers themselves. And being open-minded to the other approaches, we use technical analysis for entry, exits, and we also look at ownership trends. And some people only want to do fundamental or technical. Why not use all the best approaches and combine it into one instead of being so narrow? We were one of the first to pretty much get into this type of covering markets daily live and highlighting options activity and then analyzing it. From the perspective now, it's that we do it the fastest, the most accurate, and the most thorough. We not only figure out what's happening, but we like to determine why it's happening, and we can fall back on our research and our knowledge we've built over time to be able to really provide clear and concise reports to our clients. The R&D Innovators Basket is something I thought would be really unique to focus in on a key financial metric that has a lot of empirical evidence to suggest companies that invest in R&D outperform over long periods of time versus the market. So when we're looking at that, we're looking at capital allocation, which is an important factor for shareholders. You have your low and no growth companies that tend to utilize buybacks or dividends to return capital to shareholders. Then you have mergers and acquisitions. That can be effective. You want to, if companies have a strong history of integrating deals and they're willing to, find the right targets and pay a fair price. But when you look at R&D, it's just very straightforward. You're looking at management that's willing to invest in their company, sacrifice short-term profits for the long-term vision. They're confident in their company. They're allocating their capital right back into the company because they can see the returns in the future. And especially when you have companies with a strong history of returning nice returns on that capital, those are the companies you want to align your investments with. Yeah, I think we'll be looking at more active investors and those with a fairly good knowledge base. It's spread betting. They're more complex instruments, but you also have to look at all the advantages and flexibility they provide, ranging from the tax incentives to the low commission costs. And then by merging this over with these basket approach, you're able to participate in experts that are already curating and breaking down the research process to get you in these high quality companies, and you can be in multiple companies, so you're diversifying across a theme in one basket without having to buy each individual company, so you're lowering your trading costs as well. For me, it's just definitely I like small caps because I find a lot of edge in them, and there's just more room for alpha because you can do that type of research. Everybody knows your Google, Apple, Netflix, and small caps you have opportunities to discover great companies before anybody really knows them, and you kind of have a sense of pride that, I discovered this company and look how great they're doing now, and you can follow them over the long run and become an actual shareholder rather than someone just getting in and out of a company's share. It would take a lot of dedication, a lot of time, and a lot of work for somebody to catch up with the years of what I've done and refined my process to this point. And from that aspect, even catching up, I'm continuously learning. It's a never-ending cycle in investing. You should always be learning and staying relevant with the times and pay attention to the trends in the industry, listen to what management's saying. They're on the front lines, they know what's happening, so you can gain a lot of insight if you're willing to put in the time.